Hi everyone, welcome back to Forex Master. In today's video, we are going to conclude this topic on candlesticks and candlesticks pattern by learning about one last pattern type known as tweezers. In the last video, we learned about three special types of candlestick patterns, which were the haramis, the morning and evening stars, and even a little bit about the rarely seen in the Forex market, but still important, which was abandoned babies. You should know by now all these candlesticks counteract with one another and how they stimulate a transition in the market in their own unique ways. Today, we will learn one last type of candlestick pattern known as tweezers, and this video will conclude this topic that we've covered on candlesticks as part of your absolute beginner's guide to Forex trading. What are tweezers? Tweezers are made up of two candlesticks that are next or so close to each other. They have identical highs at the top of the market or identical lows at the bottom of the market. Tweezers usually forms by the candlestick's shadows, but it can also be made by the bodies of the shaven candlesticks. The two candlesticks that forms tweezers can have smaller bodies like doji and hammer candlesticks. For example, on the right hand side of the screen, the top picture, you see here the circled red circled candlesticks are tweezers, tweezer bottoms, which is at the end of the downtrend. There's a bearish candlestick with a lower shadow and followed by bullish candlestick with a shadow. That's tweezer bottom. And the other one, tweezer tops. At the end of an uptrend, you see a bullish candlestick with a upper shadow, followed by bearish candlestick with a upper shadow. That's tweezer tops. And if you see the other picture at the bottom, tweezer tops here, this is bullish, this is bearish. This is bearish, this is bullish. That's tweezer bottom, that's tweezer top. Tweezers cannot be considered as a strong reversal signal, and it needs confirmation, but you have to be careful when you see a tweezer signal. Tweezers that are formed right under resistance lines or above the support lines, and also under or above the Fibonacci levels that act as a resistance or support levels. Tweezers are important, especially when they are made up of two doji candlesticks. The longer the shadows, the more capable the tweezer signal is. What do I mean by that? For example, let's have a look on the right hand side of the screen. Here. Now, as we've seen this one before, the longer shadow, it means if this shadow is longer than that and this is longer, this is longer, this is longer than this, that means is a strong signal that the direction of the market will be changed from down to an uptrend, from up to a downtrend, without a confirmation. Okay, it's also possible that you see a few or even several candlesticks between the two candlesticks that form the Tweezers pattern. Even in this case, you should not ignore the Tweezers as a potential reversal signal. When there are several candlesticks between the two that make the Tweezers a pattern, they may form double tops or double bottoms patterns that shows the levels of resistance or support. Where is the resistance and support levels? This is support line, this is resistance line. Tweezer top, tweezer bottom. Okay. When the two candlesticks that form the Tweezers pattern have very long shadows that have strongly broken out of Bollinger upper band, then it should be considered as a strong reversal signal that doesn't even have to be confirmed by the next candlesticks. Okay, let's see the picture again. Here, if the shadow is longer, this is what do I mean by longer shadow. If the shadow is longer, it doesn't need the confirmation candlestick. That's a strong signal. The thing unique about the Tweezers pattern is that you can barely find a pattern that the involved candlesticks that exactly the same high price, and so their shadows are at the same level. Maybe in the stock market you can find it more, but in the Forex market it is very rare because of the very high volatility. That's a wrap. Now you have finally learned about the different kind of Japanese candlesticks and their patterns. This video concludes this topic of candlesticks, and I hope you've enjoyed this topic so much, and make sure to go over prior videos to ensure that you've officially mastered candlesticks, the ABCs of Forex trading. And remember, master the basics, because in Forex it is the basics that count. Thanks for watching, and share this video and hit the like, thumbs up, and subscribe to my channel. Till next time, stay tuned.